Alright, I'm going to make another video of the Nasdaq. So, I'll try to make it short. If we look at the weekly time frame, this is the monthly, here's the weekly time frame. It has become quite clear to me that this is a major reversal. I do not think that we are going to see new all-time highs for quite a while. This sell-off that we're currently seeing is also helping Bitcoin to go down. If you haven't seen the video I just posted about that, go check it out. I said I expected more downside, a bit more downside, 10 to 20% more before a reversal in Bitcoin. So it seems to be going down when the Nasdaq goes down, and it seems to be outperforming the Nasdaq in terms of going down. But this video is about the Nasdaq, so let's see. Clear long-term reversal on the weekly time frame. What I think we're setting up for here is, at absolute minimum, a test of the support around 24,200. I think that is absolutely the minimum that we go to. Headlines are now that people are becoming wary of AI stocks, and what I find is very interesting is that this was obvious months and months ago that AI was overblown, and that the stock market was pricing in absolute perfection with AI, and that its growth demand would just shatter all expectations. The bar has been set extremely high for AI. Now, think back to the dot-com bubble. People probably felt the same way. This is going to change everything. The internet, .com, it's going to change the world. It did change the world, but the Nasdaq still crashed 80% from the high. So, although I don't think the Nasdaq is going to crash 80% from here, because we don't have tons of companies that are making nothing and are valued at billions of dollars. Actually, that's a lie. There are, but it's not as bad. Anyways, the beverage curve as well, which is a measurement of how many job openings there are relative to how many people are unemployed or are seeking a job, it is very steep, meaning that if someone loses their job right now, it's going to be very hard for them to find a job because there are not very many job openings. So all that to say is that if the unemployment rate starts to tick upwards, it will probably start heading upwards very aggressively, and that could put the market and economy into a recession. So coupling that with Kevin Warsh, I mean, if he is a hawk, we need to be proven otherwise. But until then, you have to price in, I guess, that he may be a little harder on the system. He doesn't want just extremely easy money and high inflation. That's why the markets have been so high. We're just pricing in a very hot economy. And if that's not going to be the case going forward, then we need to come down quite a bit, especially on the Nasdaq. So I think this week, I don't know what's going to happen in terms of if we get here this week, but I would say this week or next week, we're going to be seeing 24.2. We need supporting data to come out. That could be rising inflation. If inflation starts to tick up, that's going to support Kevin Warsh, keeping rates higher. And if we see the non-farm payrolls on Friday come out and they're a huge disappointment, that's also a very bad look for the economy. So I think we'll see this, and then what I do expect to happen is we continue down into the 23s. I don't know how long this is going to take, again. As the world also tries to diversify away from the US right now with Trump's just absolutely ridiculous actions that he's been taking, turning on world leaders, obviously just lying about pretty much everything to the American public. I think that people are starting to really fear about what his incompetence is going to potentially catalyze for the United States. So I do think we're going to see a move all the way down into the 23s. And if we go to the monthly time frame, '23, that looks perfectly reasonable to have a downturn towards there. I mean, worst case, if things get really bad, I would expect us to visit this high from February, I think. Yeah, and that would be around 21. So that's, I don't want to make too long term of a forecast, just because the world is changing in at such a fast pace. There's so many curveballs that could come out at any time. But I think a safe bet is the Nasdaq drops to 24,000. We get some bad data to come out, and it continues down into the 23s. So from there, if we start to go into a recession, then I think we are cleared to go and revisit the high from February of 2025 last year. So that's my forecast for the Nasdaq. I think more downside. I don't think we're going to be seeing a new all-time high for several months. I just don't think it's feasible. I think growth is going to start to slow down, actually, and AI and this extreme capital expenditure is what's been propping up the markets. And if that starts to dwindle and big tech companies are not seeing attractive returns for investing such crazy amounts of money, they're going to taper back their investments, and that's going to bring the ship down. So yeah, I would not be buying the Nasdaq right now. I'd be waiting for another 10-20% pullback to the downside. So I'll make an update on what happens with this, but right down is what I see. I think dragging this to here. Can do this real quick. Realistically, I think this is what's going to happen. I think we're going to hit the bottom here before we hit the top. So this could be a swing trade right here, short the Nasdaq. So yeah, that's that. Looking forward to seeing what happens with this.